This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 25th, 2016. Euro dollar. So the pressure clearly is on the downside here with the market breaking down and establishing below 112. The focus now shifts down towards next key psychological barriers at 110, which guard against more significant support at 108.23 further down. At this point, any rally should be very well capped into that previous support now turn resistance area around 112.17, though ultimately, while the market holds below 114, lower tops are favored ahead of the next downside extension. Only back above 114 would really compromise this outlook and suggest more choppy trade or the potential for a retest to the top side. Sterling dollar. So cable continues to remain well capped below 147, though the market has been testing this resistance level in recent trade. If the market can establish a daily close back above 146.70 or break back above that key high at 147.70 from the 3rd of May, this would suggest that the market is putting in a more significant base and structural shift. If, however, the market is unable to establish above those levels, it would keep the pressure on the downside, opening the door for the next pullback towards potentially the 140 area. Dollar yen. So although dollar yen has seen a bit of a bounce in recent trade, the market remains confined to a downtrend and should be looking to put in a lower top ahead of the next major downside extension below 105.55, those recent multi-month lows. At this point, only back above 111.89, that previous lower top, would negate that outlook. Euro Swiss. So despite a bit of a pullback in Euro Swiss in recent trade, overall the market remains constructive and should find a higher low ahead of the next upside extension through recent highs at 111.30 and towards those multi-month and yearly highs at 112 further up. At this point, setbacks should be very well supported into 109, while only back below 108.10 would compromise the constructive outlook. Aussie dollar. So Aussie has seen setbacks extend well below the 200-day moving average, with the market closing in on psychological barriers at 70, which guard against the 2016 low at 68.27. At this point, the market has seen taken quite a bit of a beating, and so we could see a bit of a consolidation or correction before the next downside extension. But ultimately now, that previous support, now turn resistance around the 74.15 area, should do a good job of capping gains. Dollar CAD. So dollar CAD has pulled back a little bit in recent trade following an impressive run, though overall the pressure now is on the top side, with the market expected to be very well supported in towards and ahead of that recent low that we saw around 27.70, ahead of the next major upside extension beyond next key resistance at 132.19 and towards 135 further up. Ultimately, only a close back below 127.70 would compromise this constructive outlook. Kiwi dollar. So Kiwi continues to be very well offered into rallies with the market overall pressure to the downside, but also a little bit supported into dips. At this point, we need to see a break and close below 67 to open the door for an acceleration to the downside, exposing 65.46, which guards against that yearly low down at 63.47. Again, any rallies here should be very well capped ahead of 70. SPX 500. So although the S&P 500 has seen a really impressive rally in recent trade, overall the market continues to show signs of topping out above 2100, with a lower top now sought somewhere below 2100. Ahead of the next downside extension below key support at 2021. A breakdown below 2021 will do a good job of strengthening the bearish outlook and accelerating declines back towards 1930 and then potentially all the way back down to the 2016 base at 1808. Only a close or a break back above 2100 would delay this outlook. Gold. So some sharp setbacks for gold in recent trade, with the market pulling back all the way down below 1230 and now into some key medium-term support ahead of 1200. Ultimately, this market should be very constructive while it holds above 1191, that previous critical resistance area, in favor of the next upside extension back above that recent high that we saw this year and above the 1307 2015 peak towards 1400 further up.